People have been very bearish on gold, and so it's been difficult for gold companies to raise capital, and therefore they've had to agree to not such great terms to raise money. And it doesn't even have to be that gold prices are going to keep going up, just that they're not going to collapse. Gold's going to be above 3,000, right? That it's not going back down to 2,000 or 1,000, that it's going to be at least 3,000. Gold stocks, gold companies can make a ton of money at $3,000 gold. Forget about 4,000 where we are now, because for so many years, even though the price of gold was rising, the cost of mining it was rising faster. So they weren't really capturing any gain. But now you've had such a big move in a short period of time, gold has caught up a bit with those costs. And so now there's a really good margin of safety there.
Peter Schiff, a well-known market analyst, recently shared insights on the current gold market, highlighting why investors should pay attention to gold stocks today. Despite a long period of bearish sentiment, gold companies are starting to see new opportunities. Raising capital has been challenging, forcing firms to accept less favorable terms. Yet, the outlook for gold doesn't require extreme price growth. It only needs to avoid a sharp collapse. Analysts suggest that gold is likely to stay above $3,000 per ounce, a level that provides a strong margin of safety. Even without reaching $4,000, gold companies can generate substantial profits because recent price increases have finally outpaced rising mining costs. For years, gains in gold were offset by higher expenses, limiting profitability. Now, with costs stabilized relative to price, gold companies are positioned to capture real profits. Investors looking for growth and safety may find gold stocks particularly appealing, as the market conditions create a favorable environment for both short-term gains and long-term opportunities. If you found this helpful, like, share, and subscribe to The Metal Bar. Turn on the bell so you don't miss any updates, and comment below to share your thoughts on gold, silver, and the markets.
We've only pulled back from a level that we reached for a day, right? We had a quick move up, but the fact that we're just below 4,000 doesn't really feel like it's a pullback. It's only a pullback in relation to the fact that we almost hit 4,400, which was crazy in that it only took us maybe a week to get there from hitting 4,000. So if you throw that week or two out and just look at where we are, we've gone up a lot on the year. And I think sentiment, it's interesting how such a sharp decline can turn the sentiment to get everybody thinking that this is now potentially a bear market already in gold, and that there's a lot of downside risk. I think that's kind of what the market was trying to do in shaking out some of the newer entrants that, may not really have the conviction or maybe came in with some leverage and have been flushed out of the market. But we've created a lot more, I guess, nervousness so that we can climb that wall of worry. And so as far as I'm concerned, if this is a correction, it's probably already over. I don't think there's that much downside in the price of gold from here. And the same thing with silver. I mean, silver didn't hold above 50, but it did take out 50, which is something it never did really in 1980 or 2011. We got almost to 55. And now we've had a pullback, but we're holding 48.50, which if you told people even a few months ago silver would be at 48.50, they wouldn't be, oh my God, it's pulling back. They'd be very happy that silver was at this price, and especially the gold miners. I mean, gold pulling back to 3,900 is great for all these gold mining companies. They're making a ton of money at $3,900 gold. They're making a lot of money at $2,900 gold, and that never really got factored into the price. Gold has outperformed the markets, yet investors haven't even noticed that really until just recently. And I don't think that the fact that they've now decided that gold should be included in a portfolio, whereas before it had no place in a portfolio, I don't think that is going to change because, oh my God, now gold's 3,900 and not 4,300. I think you're going to start to see more accumulation of gold from investors who never bought any. And I think the central banks that have been the drivers for the past couple of years, I think they're actually going to pick up the pace of their gold buying. I think more central banks that weren't buying gold are now going to start buying as well. So I think there's a lot of new demand coming from gold, and I don't see a lot of new supply. I mean, there's some, but not nearly enough, to the extent that people wake up to the reality that Bitcoin isn't digital gold. well, then maybe they'll buy real gold instead. And so there could be a source of some extra gold buying from people who either get out of Bitcoin or instead of buying Bitcoin, decide to buy the real gold, right? Instead of some fake version of it. So the people here are not the ones that need protection. It's the people who didn't come here, that have no protection. Now, some of them may think they have protection because they bought Bitcoin, but Bitcoin, they're going to find out, is probably riskier than all the stuff they were worried about. They're going to end up losing more money in Bitcoin than if they would have just stayed in the S&P 500. But I think most people, especially retirees or near retirees, need to understand the risk of inflation and the devaluation of the dollar, and they need to do something about it. They should be buying gold and silver. I got Schiff gold, right? They could buy from me. They could buy, someplace else, but people have to own physical gold and silver, and they should have an investment portfolio that reflects the reality of what's going to happen to the dollar over time and the value of U.S. assets. And people need to invest globally. I mean, we've been investing for clients in international dividend-paying stocks. If you look at our core dividend payer strategy, year to date, it's up about 50%, which is a phenomenal return. This is probably the best year we've had in the 11 or 12 years that I've run the strategy. It's about triple the S&P. Most years, the S&P has outperformed the strategy, but now this strategy is destroying S&P. And I think this is the beginning of a major rotation out of U.S. stocks back into global stocks. So I don't think what happened with our strategy in 2025 is going to be a one-off year. I think it's the beginning of a trend that's going to last for many, many years. And so people should recognize this change and start moving money out of the U.S. stock market and investing in the markets that we're investing in our global strategies, because the valuations are much better, the dividend yields are much higher, and you get the tailwind of a weakening dollar, which I think is going to strengthen over time.
Peter Schiff, a prominent market analyst, shared his insights on the recent movements in gold and silver, highlighting why investors should pay attention. According to him, the recent pullback in gold prices is not a real decline. It's relative to the rapid surge that nearly hit $4,400 per ounce. In reality, gold remains strong, holding just below $4,000. And silver has also achieved significant milestones, reaching almost $55 before a minor correction. This temporary correction has shaken out some newer leveraged investors, but it has also created the wall of worry that often precedes continued upward movement. Even with gold at $3,900, mining companies are generating substantial profits, showing that the market hasn't fully priced in these gains. Schiff also emphasizes that investor demand for gold is rising, both from private investors and central banks. Many who previously overlooked gold are beginning to accumulate it, and some may even shift from Bitcoin to real gold as a safer alternative. With limited new supply and increasing demand, the outlook for precious metals looks promising. Additionally, Schiff notes a broader trend of global investing. Dividend-paying international stocks have outperformed U.S. markets this year, and he predicts a continued rotation toward global opportunities, supported by a weakening dollar. For those concerned about inflation and the devaluation of the dollar, investing in gold, silver, and global markets provides protection and growth potential. Let's get into the interview.
And the gold price is going through the roof. So this is a great time for these stocks, because for so many years, even though the price of gold was rising, the cost of mining it was rising faster. So they weren't really capturing any gain. But now you've had such a big move in a short period of time, gold has caught up a bit with those costs. And so now there's a really good margin of safety there. So I think, the existing companies are making a lot of money. And I think what's going to happen to a lot of these smaller companies is these big companies, right, that are now gushing cash, that have underinvested in exploration and development over the last decade. Now they have all this money, rather than gambling it on exploration projects, I think they're going to go shopping and start buying up some of the exhibitors that are at this conference. So I think you're going to see a lot of M&A in the space, and that's going to be good for all these companies, because all of a sudden somebody comes in and just pays double the market price to buy the stock, and they still look at it as a good deal. And, Trump is going around, touting how we have the strongest economy in the history of the country, right? We have the hottest economy in the whole world. And he contrasts that to the Biden economy, which, we had last year. And he said that was the worst economy in the history of America. So apparently, in less than a year, we've gone from the worst economy in the history of America to the greatest economy in the history of America. Yet the voters don't approve of his handling of the economy. So somebody's not, telling the truth, right? Either the public loves the economy, but they're afraid to be honest with the polls, or yeah, I mean, that's one area where I trust the public. I don't trust their opinion on a lot of things, but I trust them to know how they're doing themselves. Because when they're asked about the economy, they're not talking about the overall unemployment rate or inflation. They're talking about their own individual circumstances, right? And so they're answering that question based on what they're experiencing in their own lives. Are things getting better for them financially? Are things getting worse? So people know, their own circumstances. And so if they're telling the pollsters, I don't approve of Trump's handling of the economy, it's because they're worse off than they were before he was elected. And so therefore, we can't have this economic boom that the president is claiming credit for, because if things were as good as he says, it would be reflected in the opinions of those people, unless the polls are completely skewed and they're not random and they've been rigged. But I think it's more likely that Trump is just talking, right? That he's just promoting his presidency the way he used to promote his steaks. They're the greatest. They're that's he's a salesman. And so he exaggerates, I think, and that's a nice word for it.
Gold prices are surging, and the opportunity for investors in gold stocks has never been stronger. For years, rising gold prices were offset by increasing mining costs, limiting profits. Now, with gold catching up to these costs, existing companies are enjoying healthy margins and substantial cash flow. This sets the stage for major growth in the sector. Smaller gold companies could benefit significantly as larger, cash-rich firms seek acquisitions rather than riskier exploration projects. Mergers and acquisitions are expected to pick up, creating opportunities for investors as stocks are bought at premium prices. The combination of rising gold prices and strategic corporate moves makes this a compelling time for those interested in the sector. Meanwhile, broader economic discussions highlight contrasting perceptions of growth. While political leaders tout record economic performance, the public often measures progress based on personal circumstances, adding nuance to market sentiment. For investors, the key takeaway is clear. Gold and gold stocks remain strong, with potential for further gains. M&A activity and continued demand from both investors and central banks strengthen the outlook. If you found this helpful, like, share, and subscribe to The Metal Bar. Turn on the bell so you don't miss any updates. And comment below to share your thoughts on gold, silver, and the markets.